Aly-Khan, as I said, many expecting an aggressive stance from the Monetary Policy Committee meeting. What are you pricing in at this point of time?
Well, I think, the CBR rate at 7% when the market interest rates have absolutely surged. Essentially, I think the MPC has got to make that CBR rate more relevant. And I think they're going to have to do something quite dramatic to catch everyone's attention. And I'm looking for something in the order of a 3% increase, a 300 basis point increase to take that rate up to 10%.
Yeah.
I understand it's been incredibly difficult this year to manage the monetary policy side. The weather has been extremely difficult and a wild card, but really we've got to get realistic, and the lack of realism around this rate is causing the shilling to suffer.
Could political issues be feeding into the currency's fall at any point in time? It's hard to measure, but you've got the Deputy Prime Minister on trial at The Hague, accusing the Prime Minister for causing the violence that we saw at the 2007 polls.
It's a very interesting question to pose. I think we've had a lack of coordination amongst our policymakers, which I thought had been reversed a few weeks ago, but it hasn't been. We've got too many voices now wading into the debate, and our messaging has been practically dysfunctional. So I accept the point. There has been, everyone's looking to take advantage of the situation right now, whereas I think we need a very orderly and repeated message to be sent to the markets. So yes, the political risk is heightened. Everyone's watching the ICC every day, and there are concerns as to what will happen if these charges are confirmed. Will Kenya give up the Ocampo 6? And I think that's also fed into weakness in the shilling.
Let's take a quick look at the equity market as a whole as we saw it in quarter three for the Kenyan calendar. We've come to the end of quarter three. We're entering quarter four now, but a brief look back. The NSE 20 gave up all the gains of quarter two, down 16.7% for the quarter. Run us through market activity.
Well, the last quarter was pretty brutal. I think the all share was down 20% and was the worst performing index in sub-Saharan Africa. Throw in a shilling, which was down about 25%. And, you've had, if you're a foreign investor, you've taken a cumulative hit of about 45%. But counterintuitively, it's telling me that really it's looking very attractively priced on the foreign exchange and on fundamentals. We've hit a disequilibrium in so many prices, Samantha. Kenya Airways on a P ratio of 3.4 looks ridiculous, as do a number of stocks. And I think, it's at these sort of moments that medium-term investors should be stepping up. And there are plenty of opportunities to look at now, but you've really got to look 12 months to 18 months forward.
Yeah.
You can't be looking to flip the market.
Now, average daily volume is up, interestingly, from 2010. $3.6 million is the average versus 3.5 million. Why is that so?
Well, I noticed yesterday how low the volume was. It was below $1 million. I think what's happened is the market was largely supported by foreign investors who were making up about 65% of the daily volume. And foreign investors have taken fright at what's been going on globally. The macro picture darkened. North Africa, they started to take some big losses. Egypt is down 42% this year. And I think there was essentially a lack of participation from foreign investors, which has led to this downside move. Retail investors, they were disillusioned anyway, and bringing an IPO like Britac, where they're already underwater 30%, hasn't lifted that disillusionment. So it's a combination of a situation, but a perfect storm. And I think that's what's led to the downdraft in the volumes. But it's also telling me the selling pressure is not as big as some might think. And if we turn around, and when we turn around, we could have quite a sharp turnaround.
Yeah. Let's look at the top 10 gainers for quarter three.
Yes.
Interesting, a lot of small cap stocks there. And a lot of stocks that have fallen for quarter three, but not as much as the big heavyweight stocks like Safaricom or Kenya Airways and the likes, Barclays Bank. Just take us through your evaluation of why we had small caps rising in this quarter.
Well, the small caps are largely a forgotten segment of the market, and the volumes tend to be very light. So, and also they're very undervalued on classic price earnings basis. Something like Unga, you pointed out earlier, is trading on a PE of less than 3. It's got a 7.5% yield, and it looks to me a very cheap stock. And this is really replayed right across the sector. And it doesn't take much to turn the stocks around. The agricultural sector looks cheap to me, and then there are plenty of other counters which look very reasonable. So I think we've had a little bit of interest build up, and it doesn't take very much to send them up. And that's what we've seen in the last quarter. They've been a sort of safe haven because they can't go much lower.
Yeah, when we look at the top 10 losers list, we've got the heavyweight stocks in that list. We've got Equity Bank, Barclays Bank, insurance companies like Pan Africa Insurance, CFC Insurance, and then of course investment firms, Centum and Trans Century. Just run us through why we're seeing these stocks particularly being heavy hit.
Well, the big banks, there is a general sense that the banks were in a very purple patch. We had a very steep yield curve. They were able to borrow at very cheap rates in the short-term money markets and able to lend at very high spreads. The pressure that the shilling has come under has essentially shifted that yield curve, where short-term money has become considerably more expensive. Plus, the discount window has been shut fast after all that brouhaha we had earlier in this year. So the banks, fundamentally, the books don't look as if the spreads are as wide as they once were, and investors have become quite defensive about the situation in those big banks. Barclays, for example, fell 38% in the last quarter and was the second biggest faller. Pan Africa fell 40% and was the biggest faller. The insurance companies are seen as being long the stock market essentially, and the stock market has fallen very dramatically, so you're seeing a repricing of those as well. And the investment companies, Trans Century, came at a very elevated price. It came in via an introduction for listing. There was no testing of the actual underlying demand, and we've seen it slip lower because of that fact. The likes of Centum, I think, is an interesting play, but it's not paying a dividend, so people are holding paper without getting any income. It's a very good medium-term story, but in the near term, it's suffered because of that fact.
Right. Brouhaha is a new word that I heard you say. Quite like that. Is that how we're describing monetary policy at this point? Before I let you go,
like
as Safaricom, you hosted Bob Collymore recently at Mindspeak. Just give us a brief in terms of what you took away from that.
Well, I think he signaled ahead of this price increase that voice prices were going higher. He sees data prices as going lower. I think, they've had a very tough first 6 months. When the report is due pretty soon, that's when price competition was extremely intense. But, that's going to be a backward-looking number. I think looking forward, this 33% increase in the voice tariff is material. 66.7% of their revenue is from voice. It's about 67.5 billion shillings at the last full year results. I, for one, think, look, this is really oversold. It remains a positive story. You've got a very handsome dividend yield beneath it. And I think, that for investors, I can't see it going any way below here. And I think it's headed higher. And that was the impression I took away from Mindspeak.